the midweek edition of Business Morning on Channels Television. You're welcome. I'm Ini John Mekwa.
And I'm Ladi Williams. Great to have you. Let's look at what's in the news. Oil prices climbed today after industry data showed U.S. crude and product inventories fell more sharply than expected last week, reinforcing expectations that demand will outstrip supply growth even amid a surge in COVID-19 cases. U.S. West Texas intermediate crude futures rose 43 cents to $72.08 a barrel, reversing Tuesday's 0.4% decline. Brent crude futures rose 38 cents to $74.86 a barrel after shedding 2 cents on Tuesday in the first decline in 6 days. Data from the American Petroleum Institute Industry Group showed that U.S. crude stocks fell by 4.7 million barrels for the week ended July 23rd. Gasoline inventories dropped by 6.2 million barrels, and distillate stocks were down 1.9 million barrels.
And yesterday was a very interesting one in Nigeria. Ladi, yes, the long-awaited decision from the MPC. We saw that yesterday, and it was another unanimous hold decision at the end of the fourth MPC meeting.
Right.
Members voted to retain all key parameters. The benchmark interest rate as the MPR was retained at 11.50%. The asymmetric corridor remained at plus 100 to minus 700 basis points. And the cash reserve ratio was retained at 27.50. Liquidity ratio retained at 30. While this was expected, the unexpected news, however, was the one with the BDC, Ladi.
Yep, that's the big one.
Yeah, even the headlines
yes.
today, newspapers could not resist
the
it.
MPC blowing hot flames. The governor over bureau de change operators. It was quite a big one.
Very unexpected. And we even attempted to get the association to come and react to it, but I guess they're still digesting the news.
Yeah, because it's
they have not
quite unexpected, I must say.
Very unexpected. But this is not the first time.
It's not the first time. The first time that happened, it wasn't good, though, for the Naira because it depreciated about 50%. So if that happens now, it would be quite hard.
Because
that'll be about 900 Naira to $1 if that happens.
I don't pray
that
to see
if it, if it's the same effect.
Same effect.
Yeah. So,
and in the coming days, there'll be a lot of analysis and watching the space to see the impact of this decision, because already people are saying it was the difference between both markets was high before. So, because it's not like the BDCs are not going to be operating anymore.
Yeah.
Just that the CBN has said it will stop giving them the AFEX.
Exactly.
So we think of where do they source their AFEX from,
and
at what price?
Would it help, supply at the end of the day? Will we be able to get dollar when we actually need it?
Will
That's
the
another
bank be
question.
able to meet up with the demands?
Yeah.
So these are the
we
questions.
have that tell and we have that number to call just in case.
Just in case, I'm going to number gets through. Well, it's no longer news that it will not be business as usual for the bureau de change operators in the country. The central bank has said it will discontinue the sale of foreign exchange to them. The CBN governor, this is part of what the decisions that came through from the MPC meeting yesterday. Let's just have this report and see some other details from that meeting.
This is the fourth Monetary Policy Committee meeting by the Central Bank of Nigeria this year. Rising from the two-day meeting, the Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, reels out the Monetary Policy Committee decisions pertaining to the foreign exchange market. The Apex Bank boss gives commercial banks the marching orders on the sale of forex, vowing that they will be monitored closely henceforth.
The Central Bank will henceforth discontinue the sale of foreign exchange to bureau de change operators. B, the bank will no longer process or issue new licenses for BDC operations in the country. This stoppage extends to all licenses being currently processed, regardless of the stage of that processing. The public should note that once a customer provides the basic documentation to purchase foreign exchange, all banks must immediately, either on demand or within a stipulated time frame, sell foreign exchange to the customer. Any customer who does not receive foreign exchange along these lines must report this to their bank, and where they are unsatisfied with the resolution, they are required, indeed they must, contact the CBN on our toll-free line.
Threatening to deal ruthlessly with banks that work with these operators, the CBN governor adds that this move is to safeguard the nation's currency. He also has some words for those he claims are collaborating with the bureau de change operators.
We will deal ruthlessly with the Nigerian banks who have acted as collaborators with these illegal forex dealers. We will deal with them ruthlessly because they have allowed their banking and payment system infrastructure to be used to facilitate this illegal dealing in foreign exchange. As for those foreign organizations involved, we will report them to their regulators. We will write to those organizations seeking their understanding and that they must desist. If they seek to operate in Nigeria, they must go through the right channels through which they must procure either foreign exchange or procure naira for their domestic operations.
The decision to stop forex sales to the BDCs, the central bank governor says, will stop the greedy attitudes of these operators who have left their purpose of being retailers and have become illegal dealers.
Although the conversation has been more about the BDCs and banks, where there were other issues, and we have Temitope Omoshiri, an investment strategist, strategy analyst with AfroInvest Asset Management, to weigh in on the topic. It's great to have you this morning. Good morning.
Thank you.
Good morning.
Thank you.
Yes, it was quite a dramatic ending to the meeting yesterday, but we have the consistent CRR debit by the CBN and a whole decision by the MPC. Do you think financial deepening will improve with this decision?
Well, to start with, I think financial deepening has to do with how the financial sector is able to affect the real sector of the economy. That is, how they are able to provide finances in addition to financial inclusion, because everything has to be on the back of financial inclusion. So really with the policy, when I talk about financial inclusion, it has to do with how banks and financial system generally is able to, affect the private sector, the real sectors of the economy. So the question is, do we think this will really affect the real sector? Do we think that there's an incentive for the banks to lend more? One thing we know over time is that, banks are sensitive to even just a signal of increase in rate than a major reduction. Right. So even a neutral position will not even move a needle. Will not move a needle.
Because the governor also spoke about, advising the banks to actually lend more to, advance more credits to individuals, and it's at this point. So is this possible?
The point is, why are banks not even lending as well? Though we observed that over in the last few months, about 4 or 5 months, credit to private sector has actually improved. But when you look at the components, the credit is actually not to the sectors of the economy that you think are labor elastic. For instance, about 25% of even credit to private sector is to the oil sector. And this same position was what we had in 2016, 25%. Nothing has changed. That was what led to the increase in NPL and a lot of challenges in the sector. So the problem is that if we want banks to lend to the private sector, then we have to de-risk the economy. Because, banks...
How do we do that?
So if you're talking about de-risking the economy, then we have to look at the structural problem we're talking about every day. You won't want to invest in agriculture and get to know that the farmer is sent out of the farm and maybe due to a farmer either problem, and you won't even want to get to know that you have actually lent to someone and the person is currently grappling with exchange rate challenges because the person converted the naira you gave him at maybe at 400 and you're talking about 505 now. So automatically that player, that firm has lost without even doing anything because of exchange differential.
How do you relate this? Yesterday we had a conversation on investment, and we saw that domestic investment is actually going up, and manufacturing is being favored. Fine, you might, like you mentioned, there are insecurity issues, there are clashes, that have discouraged investment in some of these areas, but maybe people are looking beyond that and still going ahead, to take these risks.
Well, it's quite funny that if you look at, let me give you a very good instance. If you look at the components of foreign trade statistics, I observe that, it's possible you just advance loans and credit to manufacturers and they even use it to import. So, and the most important thing, what we're talking about in terms of Nigeria economy is value added production. That is kind of production that will enhance labor market, reduce unemployment, because, you know, we talk about backlogs and issues around their papa and all of that. So they would rather get those funds and probably import these things, so they wouldn't have to grapple with issues around the value chain of their, you know, manufacturing processes. So it's possible you advance so much to the manufacturing sector, but the economy is not optimizing it because it does not pass through the value chain. The, you know, Nigerians are not employed because if imported as an alternative.
All right. So another issue that came up from the MPC was the issue of money supply. Broad money supply increased marginally in June to 34 trillion naira from the preceding. What implication does this have on the economy?
Well, you know, economy parlance or the general economy theory is that when you have so much money engaged few goods, you're talking about inflation. Right. For instance, if you look at even taking it away from the broad money supply, because, you know, broad money supply has so many things inside of it. You have is the addition of currency outside the bank, plus demand deposit, time deposit, and maybe all these T-bills. But what affects an average man on the street is currency outside the bank. That's what measures the purchasing power. So currently, currency outside the bank even went up by about 20%. But for instance, look at nominal GDP just grew by 12%. 12%, you know, which means, and GDP is just about the actual output, the economy activities, you know, that has been experienced over that certain period. But so, meaning you have 12% in terms of GDP, 20% currency outside the bank. That is actually fueling inflation.
Well, how do you see this, you know, going forward? Do you see the money supply still going up? Well, we still have, you know, debt servicing and all of that, and obviously there's also this money printing issue there. So, what do you think?
I think this CBN is trying to ensure that, you know, the level of liquidity in the system is properly managed, and for the fact that you see that each time a bond or TBs, all these financial instruments are maturing, they quickly issue another one, so as to ensure that, you know, we don't have so much money chasing few goods. And if you say few goods, you know, it's quite funny that the few goods we're even talking about now is forex. It's now the new good, like the gold. Right. So beyond saying that you are taking away money for people from people, so as not to put pressure on maybe say Gary, all of those things. These are not the problem. It's even the goods we are looking at is we don't want so much money against the US dollar. Right. We don't want people to even have so much to speculate against US dollar, because we know that even in the market, apart from people that actually need dollar for real imports, for import that to facilitate the real sector, a lot of people demand it for speculation. And you know, speculation angle will not actually help the Naira. So that's why the CBN will continue going forward. The CBN will continue to find a way to reduce the...
So do you think that this clamp down on BDCs and that it will have a kind of,
would this have,
you know, correction effect?
Well, it's quite interesting this is happening. Well, to the BDC, I would just say, tell them not to be angry with the CBN governor or something, to just because. But the truth is this: if you observe over time, I did personal research, and I observed that periods of low divergence between official rates and the parallel market rates, you will see significant inflow in terms of FPI. That is, so when official exchange rate and the parallel market are very close, you will see inflows in terms of improvement in capital importation. So if going by that, is actually commendable that the CBN is taking the decision at this particular time to actually bring all the market together. You know, the CBN is trying to unify the exchanges so as to encourage foreign investors. Even in a general economy, it's not advisable when you create a kind of what we call segmented markets. When you just segment your market, you are selling the same product, because there's no value. What's the difference between a Naira at 500 Naira and another one at 400? We're just creating a kind of arbitrage and distorting the economy.
But can the banks handle the demand? I mean, a lot of people already have issues with getting this forex from the banks. Yeah. You know, people just run back to the black markets as
a backup. Really.
Yeah, so now that you don't have that, or that is more difficult to access, then can the banks handle it?
So,
or do we trust the bank to handle it transparently? That's another issue.
That's where the CBN comes in, actually. The CBN is the regulatory authority that has to provide the groundwork for this thing to actually thrive. If the CBN, for instance, jokingly, if the CBN wants another 20 banks or 30 banks in Nigeria today will get it. What I'm saying in essence is that the CBN should just push the bank. The authority has absolute control over banks. Should push the bank to ensure that they comply with other measures that will enhance these whole processes. And in terms of communication as well, I'm sure the CBN will be working on how to ensure that they continue to communicate so that people will not get the wrong signal, because signal is also very important. I think they can. It's all about commercial bank increasing their capacity and even have the good, having the interest of the FS market at heart.
All right, let's go back to 2016. The same period, the central bank actually banned the BDC operators at that time. And what happened is the Naira depreciated about 50%. So, you know, now this has happened again. We have Naira at about 500 Naira to a dollar. What's going to happen?
Well, this period is quite different from 2016, a little, because you observe that when the CBN took the decision in 2016, it was in January, and at that period, you observe that there was deceleration in FS reserves, and oil prices were not even recovering. Like, oil prices were still down, like it was heading downward. But this time it's quite different because, you know what has happened to oil price in the last few months. Even compared to last year, we've recorded over 30% increase in oil prices from as low as $20 or $15 per barrel last year. And if you look at what has even happened to foreign reserve in the last few days, that's also, tick upward. So it's possible that the CBN even understood all these things. They are so strategic to actually make the decision at this time, so as not to, to deviate a bit away from what happened last year when, there were so many negative sentiments in the market. But now, the sentiment is changing a little on the back of oil prices, where a lot of investors will start saying, will believe that, Nigeria fiscal stance will consolidate, and oil prices as well, So all of those factors together, I think it's a very good time. Okay. And you will look at, even if you look at it even on a broader scale, you observe that a lot of international agencies that want to give Nigeria greenbacks, that want to actually get us some money, they always base it off the unification of the currency. We need all those people than just FPIs.
And we still have that dollarization concern, Okay,
but let's not dwell on...
Let's not dwell on that, okay.
We have other issues, that were considered. For instance, the CBN did mention that 98.14 billion naira has been disbursed to healthcare intervention, and 120.29 billion naira given to 11 discos for infrastructure development. These are major issues that affect the output of the economy, and these are impressive figures that we see. But are they having the expected impact?
Well, I think the impact is, there's always a lag between when a policy is put in place and when you begin to see the impact. But I think it's a very good step, is the right step, actually, because let's look at it from the health sector. You know that Nigeria has, in terms of, let's even go by the life expectancy rate, Nigeria is just about 58 years compared to South Africa, 64, India, 69. And if you look at what is happening, even in the health sector, you see exodus of medical doctors because they don't find the climb maybe attractive enough. So I think it's a good step. And I think it will actually enhance or at least pretend that something is actually happening in the health sector and to the energy sector or the electricity and all. I think discos particularly, I think the issue has always been around affordability and poor metering as well. So I think if this fund is properly channeled to, ensuring that people have meters and all, I think it's quite good because we are still grappling with having over 45% of Nigeria out of, they are not connected to the to electricity. They don't have access to electricity. And there are a lot of people are yet to be metered. So all of these factors, and no economy can actually thrive if, for instance, there's no power supply, you don't have power supply, and again, human capital development. The level of development you see across most advanced economy is a function of their human capital development. And two factors are important: human capital development, health, and education. If you are not healthy, you can't be productive. If you are not healthy, you cannot be innovative. Right. So I think it's quite good.
Yeah, well, at least we also have a supplementary budget that was just signed 2 days ago. Yeah. It also has a health component there to do with COVID-19. And
security matters
we'll certainly be looking forward to the impacts of this in the health sector, especially as the country or the world still deals with COVID-19.
COVID-19.
Yeah. Well, we wanted to thank you so much for being a part of the show,
Thank you.
Mr. Temi Tope Omoshiri,
Thank you.
Investment Strategy Analyst with AfroInvest Asset Management.
Thank you so much.
for sharing your thoughts with us this morning.
Thank you.
Thank you.
And enjoy the rest of your day. We'll just take a break now. After that, we have AFEX Commodities Market. Do stay with us. It's Business Morning on Channels Television. Welcome back. Well, the week ended 26th of July was a bullish one at the AFEX Commodities Exchange. Total value traded change week on week was up more than 200%. Michael Martins, the portfolio manager at AFEX, has the details. Hello, Michael. Good morning.
Hi, Ine. Good morning.
Good
Thank you for
morning.
having me once again. So it's
Yeah,
lovely to
another
be here.
week and another look at the AFEX market. So what drove this total value that went up more than 200%? What drove that positive movement?
Yes, thank you very much for that question. So if you look at the table in front of you, you would see that the total value of transactions that happened on the exchange in the week under consideration, it went up by 270.38% from around 0.56 billion to close the trading week at 2.06 billion. And that's largely due to the fact that there was a significant increase also in the number of contracts traded in the week under consideration, with the total number of contracts going up by 293.13% from 32,297 contracts to close the trading week at 126,972 contracts. The number of deals, however, fell slightly by 14.29% from 21 to 18. But it is the case that we had a higher value for the number of deals this week in comparison to previous week. Some of it is also reflected in the AFEX Commodities Index, which is the ACI, which went up slightly by 1.06% from 476.72 points to close the trading week at 481.75. The AFEX Export Index also went up slightly by 1.27% from 171.52 to close the trading week at 173.71. With regards to the major corporate, with regards to the number of the total value transacted on the exchange, maize went up significantly in the week under consideration from 30,000, and this is regards to the volume of contracts traded. Maize went up from 30,410 contracts to close the trading week at 125,000, at just over 125,000 contracts. Another commodity that traded higher this week was paddy rice, which traded from 3 contracts last week to close the trading week at just over 1,000 contracts. With regards to price changes on the exchange, this week was generally quiet as we didn't see a lot of price movements across board, but we did see changes with paddy rice, which went up by 12.32%, gaining 2,545 naira in the contract value to close the trading week at 23,195 naira, and also soybean, which went up by 1.40%, gaining 500 naira in the contract value to close the trading week at 36,183 naira per contract. Lastly, but certainly not least, we have the fair trade exchange traded commodity, which largely remained unchanged in the week under consideration, remaining at 16,197 naira per contract. So that's essentially all of what happened in the commodities market in the week under consideration.
All right, Michael, let's review how, the commodities market performed in the second quarter and first half of the year, including, factors that might have affected the market. How would you compare, the performance of the first half of this year to the performance of the first half of last year?
Thank you very much, Ladi. So broadly speaking, the commodities market this year has done better than the numbers that we saw last year. So if you look at the AFEX Commodities Index, which is essentially a proxy for the commodities market, the ACI this year is already up approximately 52% thereabout, in comparison to last year, which it was up around 41% around the same time period. So that's a difference of around 11%, and that's just comparing that broadly. And some of the major commodities that have contributed to this year's performance have been maize, soybean, sorghum, and ginger, in comparison to last year, where the star performers were essentially maize, paddy rice, and ginger. And a lot of that has also been due to some of the factors that we have seen in the commodities market. So That is largely due to what we have spoken about at different points in time during the course of this show, about the seasonal dynamics that we very often see in the commodities market. And this is essentially the major factor that contributes to that price dynamics, or prices rising over an extended period of time. And so, as we always say, during harvest, when you have significant volume available in the market, prices tend to fall significantly, crashing. And then as that supply begins to dwindle over the course of an entire 9-month period for the commodities market, the prices tend to rise. Prices tend to rise as demand overshadows supply. The effect or the severity may very well be different from one season to another, but it is the case that across board, regardless of whatever commodity season that you are, prices will tend to rise for commodities over an entire 9 to 10 month period. Another factor that we also see, or that we also saw, that contributed to commodities prices rising significantly this year would also be the CBN foreign exchange policy. So sometime last year, the CBN had come up with a policy that they would essentially not make foreign exchange available to people that want to import maize and soybean. And what this essentially did was that for most people that wanted to procure commodities internationally, they were essentially forced to buy locally, increasing the amount of demand that we had for these commodities. And last, and certainly but not least, would also be the exchange rate. And this is similar to the second point. And essentially, if you look at the numbers for the exchange rate, you would notice how the exchange rate, particularly with the parallel market, which is essentially what most of these processors have access to in the first place, has essentially adjusted from around 380 to 410 to now the 500, 505 that we are seeing in the parallel market. And this essentially, like I said earlier, has forced a lot of the processors to buy locally, increasing demand significantly for commodities. So when you look at the collusion of all these three different factors, that's first of which would be the seasonal dynamics, second of all which would be the CBN foreign exchange policy, and then thirdly would be the exchange rate adjustment that has happened over the course of between last year and this year. And those are the three biggest factors that we believe have contributed to this year's price dynamics.
Okay, and I believe, when you compare last year and this year, the issue of the lockdown, restriction to business and economic activities have also made this year juicier than last year. So what about the issue of inflation and insecurity? These are things that the country have been dealing with, and of course has affected every sector of the economy. How much has it impacted commodities market, and how would it play, going forward?
Okay, thank you very much for that question. So with regards to insecurity, we believe that it has by and large had a muted effect on the commodities market. We have at different points in time spoken about the fact that most of the insecurity issues tend to happen at urban and quasi-urban areas, and not necessarily the rural areas where smallholder farmers are situated. If we were to see any sort of significant effect with regards to insecurity on the commodities market, it would essentially be in two ways. And that, the first of which would be farmers' inability to cultivate, or to go to the farm to cultivate, which would of course be due to the fact that there's a lot of insecurity in the area. And then secondly would also be with logistics cost, and this would be evident in the unwillingness of certain logistics companies to move to transport from one location to another, depending on what the level of insecurity is in that place. It could also be reflected in the fact that logistics prices could also rise significantly depending on what the insecurity issues are, with regards to the geographical location. But it is the case that when you want to compare the effect of insecurity on the commodities market, we would not necessarily see the effect of that until the next commodity season. So like I said, we haven't really seen that much of an effect this season. If we were to see any sort of effect, it would necessarily be in the next season. With regards to inflation, we have spoken about how there is a fair degree of correlation between inflation and the commodities market, and how a simple regression analysis between both would suggest that that correlation can be as high as 80 to 90%, depending on the month that you're considering. But it is the case that we don't necessarily know, or we can't say with absolute certainty what the direction of causation is, whether or not it's the commodities market that feeds into the inflation rate, or whether or not it's the inflation rate that contributes significantly to what is going on in the commodities market. But this is what we do know. Insofar as there are certain commodities that are part of the food inflation numbers, and we know that largely what is driven inflation this year is food inflation, we know that the commodities market contributes significantly to the inflation rate. And with regards to some of the other elements in the inflation numbers, and that would be the core inflation, we know that that also significantly corresponds to to not some of the prices and changes that you see in the commodities market. But more strongly with regards to next season, what we see or what we expect to see as some sort of effect of inflation on the commodities market would essentially be on production levels. All right, so we have spoken about how input cost or production cost for this year, which of course is essentially inputs, have sort of doubled in comparison to last year. And this is essentially important because input cost or production costs tend to feed significantly into the price levels that commodities start at harvest, right? So moving forward over the course of the third quarter to the fourth quarter, we would essentially be seeing the effect of inflation on price levels.
All right, Michael, what does AFEX have planned for the market this quarter?
So, I mean, in between the third quarter and the fourth quarter, there are essentially two major things that we're trying to do. The first thing would essentially be market education, and this is of course in contribution to what we are currently doing through this show, which is us essentially educating the market on the opportunities that are available in the commodities market, the dynamics of the commodities market, so that every single person and every single participant is sort of aware of the opportunities that they can take advantage of in the commodities market, and that's regards to market education. So we are doing a lot of road shows, we are doing a lot of seminars, webinars, and programs to sort of get people up to speed about what the commodities market is about. Secondly, would also be the launch of financial market products. An array and a flurry of financial market products will be made available in the fourth quarter of the year, and this would range from spot contracts to fixed income notes, to asset-backed commercial papers, and also with trade finance notes. And depending on the kind of participants that you are, these are, as we always advocate, is usually the best time to get into the commodities market, particularly with spot contracts, because that's essentially when prices are lowest, and then you can take advantage and ride those prices over the course of an entire commodity season. For people that are into exports too, they can essentially take advantage of trade finance notes, and then for processors that are also looking to raise money from the financial market, they can also take advantage of the asset-backed commercial paper program, which we have demonstrated to be extremely successful. So those two things would essentially be what AFEX is trying to do in the third and fourth quarter of the year, which would essentially be market education and then also making financial products available so that people can participate in the commodities market.
All right, Michael, a lot of information always coming from AFEX commodities market, and but I think you forgot to mention where we can go to for more information.
So like I always say, if you want to know more about the commodities market, our website is always available. It's www.afexnigeria.com. And if you want to get started actually trading commodities, or even if you want to get started learning about the commodities market or how to trade spot contracts, you can always download our app, which is available on iOS and Android. And there will be somebody to take you through the process of how to begin, and then how to start investing, and then how to essentially make money from the commodities market.
All right, Michael, thank you so much. And I hope by next week when you come, we'll talk about the fact that the harvest season is upon us and the plans that AFEX has. Well, thank you so much for the much of information that you've given us today, and enjoy the rest of your day.
You're welcome. Have a wonderful day.
And you too. Welcome back. Well, yesterday was a BDC conversation day, even overwhelming the fact that the MPC held rates. And the market, I don't know if they've reacted to it, but Will is here to tell us if the market has reacted to that information yet. Hello, Will.
Good morning, Ini. Yesterday was quite an interesting one. After the MPC, we saw where the CBN governor said he was very worried about the arbitrary activities of the Bureau de Change, and the MPC, decided to immediately discontinue the sale of FX to BDCs, allow the CBN. The CBN is no longer going to process or issue new licenses for BDCs. And we're seeing that weekly allocations that going to the businesses will now be channeled to commercial banks. But we also saw that the little change, there was little change in the Naira, the exchange in the I&E window. We saw that it was flat at 411 Naira, 67 kobo to a dollar. But we're now seeing that rates are ranging now at the parallel market from 504 Naira to 510 Naira, because we saw this last week it closed at 500 now. We're beginning to see this reaction in the BDC, in the parallel market, following that announcement by the CBN governor. in the short term, we think that this new development could lead to further pressure on the exchange rate in the parallel market. That could be very scary. And we are hoping that we'll be able to move on and get maybe better perspective maybe when we have our guest. We have Choma, like rightly said. I was just expecting Choma to come in and tell us what is going on. We have Choma, a fixed income dealer at GT Bank, to give us some perspective on this. Good morning, Choma. Good morning, Choma. Are you there? I think we have lost there. But in the meantime, we're hoping that there'll be some stability in the FX, and especially for the investors that need to change this money and get their goods, import their goods, and do some exchange for businesses. And we are hoping that the ease of business, if that is done properly, it could open up the markets properly and not allow inflationary pressure based on the stoppage of BDC allocations, FX allocations to the BDCs. We'll move on to the FX fixed income market, where the recent bull run in the bond market eased off the gas in yesterday's session, as market participants kept a watchful eye on the CBN's actions and after the MPC meeting yesterday. However, offers improved across the bond curve, most especially at the mid and the long end of the yield, of the curve, and the average yield fell by 9 basis points to 12%. We have Choma back on the line to tell us what happened yesterday. Good morning, Choma. Hello, good morning, Choma. I think we've lost her there again, bit of a technical issue. We move on to the Nigerian Treasury bills market, where we see that there was a bit of activity there, but just number of deals was 3, and we had total number value of 2.5 billion naira, and average yield contracted by 41 basis points to 6.3% across the benchmark curve. The average yield dropped at the short, mid, and long segments as market participants demanded for the 79, 184, and 338-day maturity bills. Similarly, at the OMO market, average yield fell by 2 basis points to 8.6%. And flipping over to the equities market, we see that the all-share index closed negative yesterday, and this was rightly expected because as investors are beginning to move to take profit after recent gains. We saw the sell-offs in the stocks of MTN, and whose share price was down by about 1.15% at the close of trading yesterday. And this triggered the 0.12% drop in the all-share index. And the market capitalization lost about 24 billion naira from the value of listed equities. Market turnover was negative, closed negative, as the volume fell by about 1.4% to 243.08 million units, valued at about 1.9 billion naira, and the deals was over 4,000 deals. It's no surprise that MTN was the most traded stock by value at 220.4 million naira due to the sell-offs that we observed earlier, that I mentioned earlier. And analyzing it by sectors, we see that oil and gas, banking, consumer goods, all the other indexes, the key indexes, gained except for the insurance sector. And like our colleague Anita always says, the insurance sector always works inversely when other sectors are gaining. And well, the sentiment was flat. We also saw that there were 19 gainers in the market yesterday, as well as 19 losers. So that made it very flattish. We move on to over to the OTC market, the over-the-counter market, the listed market, the NSD Securities Index, and the market cap closed positive in yesterday's trading session. The volume, value, and deals rose significantly. We saw that the volume was at 290.31 million naira. Value was at 406.33 million naira, and the deals was 36. There was a massive jump, like I said, in the turnover and securities. The clearance Friesland Campina was the major advancer in yesterday's deal, and we're hoping that there'll be much, and the NGX, as usual, declined, was one of the losers we had in yesterday's deal as well. So we're hoping that there'll be much changes in today's trading session, hoping for positive outcome following this recent MPC announcement.
Look forward to a more positive outcome, Will, especially the market's reaction to the issue with the BDC and, of course, the whole decision of the MPC. I know in the coming days we would see the market react to that, and we'll know what direction it takes. Thank you so much, Will. And now we'll take another break. When we come back, we'll do an opening call to London. Do stay with us. It's Business Morning on Channels Television. You're welcome back. Now we head to London, where Juliana is standing by to give us updates from the UK. Hello, Juliana. Good morning. Another beautiful day.
Good morning to you, Winnie.
Yeah, and we start with the good news that the International Monetary Fund is forecasting that the UK economy will grow faster than expected. So the vaccination program is paying off in spite of the Delta variant and its threats.
Absolutely, the vaccination program is paying off. And according to the recent data from the Office for National Statistics, 90% of British adults have received one dose of the vaccine. About 70% have received 2 doses. So Britain is way up there in terms of trying to get people to remain as safe as possible from COVID-19 infections. And this has been reflected in the International Monetary Fund's periodic global economic outlook. They suggest that this year British GDP will expand by 7%. This is much higher than any other European nation. In fact, I believe it's double what's expected in Germany, Italy and France. And it puts it neck on neck with America. So they are one of the highest GDP growth rates in the G7 this year. Next year as well, I think growth is expected to peak at about 4.4%. So hopefully by the end of next year, the British economy will be back to where it was pre-pandemic, February 2020. There's already been reaction from British Prime Minister Boris Johnson. He's took to Twitter to say that this just does show that the economic recovery is in full force. And we also heard from Chancellor Rishi Sunak, who doubled down on Boris Johnson's claim. So yeah, this is a really good news, particularly as Q2 GDP doesn't look to be as strong as the Bank of England had previously forecast. May GDP grew at 1.5%. This is the slowest growth we've seen since the unlocking, but who knows? Lots of people have been spending money. The Olympics is on, Euro 2020 is on. So once these figures start coming in for the month of June and July, we could be in good stead to reach that 7% that the IMF predict.
Yeah, looks like a good one for the UK. Well, Barclays is also doing another first. It's a major UK bank to hand more money back to investors since the Bank of England scrapped the remaining COVID-19 restrictions. Well, shareholders are having a great time now, I guess.
Oh, gosh, they certainly are. If you're a big shareholder in Barclays Bank, you'll be smiling today. And in fact, their shares are up 5%. They're one of the biggest blue chips to pull up the FTSE All Share this morning. And that's because it is earnings season. Barclays, the first big British bank to kick off that. And their trading report is well ahead of what economists had forecast. Revenues come in at about £5.4 billion. Also, as well, their net income of £2.1 billion is way ahead of what it was this time last year of just £92 million. And this is, of course, all because of impairment provisions, money that was put aside. So much of the coronavirus loans that were released by the Treasury were backed by British banks, and they were particularly concerned because, of course, they weren't sure whether or not companies and businesses were able to pay that money back. Some haven't, but most of this money has been coming back. So there's money in their coffers, which is why they've also increased dividend payouts. I believe it was supposed to be 1.8p per share. It's now increased to 2 pence per share. They've also done a buyback program of just less than £1 billion. So it's really good. It just goes to show that the banks are profitable again, even at a time when interest rates are at a historic low of 0.1%. The Bank of England can rely on the banks to keep the economy ticking over just in case COVID does start rearing its ugly head in Britain again.
Yeah, and the FTSE was down this morning. It slipped by 0.2%. What drove this?
Yeah, it's still a bit of a subdued start. Earnings season is well underway. We had the big Silicon Valley tech titans proving that they have cut the mustard during the pandemic. But the Chinese regulatory issue still is affecting the Hong Kong Sangdex index, which is why that was lower. That's dragged down the FTSE. And then it is in a wait-and-see mode. All eyes are going to be on Jerome Powell. The US Fed Reserve have been meeting for 2 days. We want to see what's going to happen later this afternoon. Are they going to start tapering back asset purchases? What are their comments going to be about inflation? We did hear from the IMF, and they agreed with what central bankers across the world have been saying, which is this is just transitory, but we are still very much in uncertain times. Delta variant is starting to rear its ugly head in the US. So yes, I think it's very much a little bit of anxiety, but we'll just have to wait and see. Hopefully by Bizink, there'll be an update from the Fed Reserve, and I'll be reporting that to you in the team, Minnie.
Yeah, sure. Certainly. We'll be looking forward to that at 1:30. Thank you so much, Juliana Anda. We'll talk to you later on today.
Thank you.
All right, so let's move over to the crypto market now. Well, a very quick and positive switch from a whole lot of red yesterday to a whole lot of green today.
Yeah, from that Amazon announcement dump, the market has actually recovered. Now we see Bitcoin trying to break that 40K this morning. A couple of major altcoins all in the green. XRP doing really well this morning. Look at the market cap, $1.54 trillion traded up about 4.77%, and 24-hour volume is down about 10% at this morning at 8 a.m. Bitcoin dominance is inching up there at 48.57, almost getting to 50%, showing that there is some strength there with Bitcoin. Price of Bitcoin at 8 a.m. this morning, $39,861, up 7%. 24-hour volume traded in Bitcoin, $37.10 billion. We have the 1-hour chart here. We see it is quite in a midsection on the RSI chart. The MACD is looking like it wants to cross for price drop there. And we see the price heading to that middle moving average on the 1-hour chart. But it's still looking quite strong this morning for Bitcoin. Price of Ethereum, $2,280, up 3.49%. $22.11 billion traded in Ethereum. Let's bring in Rume Ofi now. Hello, Rume. Good morning.
Good morning, Larry.
Good morning, Rume. Well, yesterday, I see the central bank governor talked about the e-Naira and also still, maintain position about deposit body banks carrying out crypto transactions. That ban is still on. What do you think?
I think the central bank is actually doing this because of we are actually perceiving private cryptocurrencies like Bitcoin, Ethereum, and others as challenging financial system. I don't think that should be the right thing. But I know all of this is the conversation that are being global, even in the U.S., we see it here, and some other countries in Africa too. But I understand your concern, but there's a way we could put all of these together, because this way we are going, I don't think we have all of the capacity to manage. I don't think CBN has done enough to enlighten the citizens on how they want to go about it, and we are concerned with powerhouses here in this part of the world, which is also a major concern that can jeopardize all of these things that they are planning to do. Also, we're also looking at the point whereby there could be possible hack if it is not done well. Then issue of privacy here and there. Imagine me transacting and people and a particular person having an idea of how the data is moving. It is not something that someone will want to to get themselves into. So I'm thinking that CBN needs to engage stakeholders and see how far. But again, we don't have to see the private cryptocurrency as a competition. They should see it as an asset which will help for us to do better things in our remittance system.
And you also did mention that you can't buy the e-Naira with Bitcoin. Do you think traders are looking to do that?
I don't think I didn't get that question very well. But if I get you saying buying Bitcoin with e-Naira, I think the the system doesn't permit for banks transactions, carrying out transactions, so it is not going to be accepted because it's already been seen as a threat by the authorities. So all of those things is what we need to come in terms of either to be seen as a legal tender or to see it as a digital asset. Or ordinarily, it is the Security and Exchange Commission that is supposed to come with framework around it. And they've come out previous time, I think last year, and said that to see that this digital asset, and even the Vice President said it earlier, that we should create a framework, the authorities should create a framework around it so that Nigerians can tap them, because it comes with a whole lot of opportunities. So I see it not be possible to allow that to happen because we want to protect what we do. But in the long term, I don't think the Gen Zs and the millennials will want to claim to something that
the Gen Zs.
by the authorities we perceive that is not for them.
Okay. All right, Rume, we see Bitcoin trying to break that 40K range again. What's happening in the market?
Most times people think that the market will move by, Elon Musk said, the market will move. So as I said, the market will move. Yesterday there were various hearings in the U.S. About how cryptocurrency. So these guys are engaging various stakeholders to hear about how this can better help the economy. I think that's how we also need to do. But the market has a mind of its own, right? The market moves on its own terms. But one thing I always advise those that are my mentees, that they should always look at the volume price analysis. Look at how the volumes are coming in, how the market is absorbing all of those volumes, and in relation to price. It's not always about the news coming up. The market has a mind of its own, and it can decide to move in a certain way. But hopefully we are seeing the market recover from all of those shocks from the Chinese government ban on mining and some other news. And we can see that only shows that a lot of persons are coming into the market to see that this is transparent and they can do their transactions easily.
Okay. All right, Rume, thank you so much. I will talk to you again later on. Thank you so much. All right, Ini, see top odds by market cap are doing well in the green there. XRP at this hour trading about 73 cents, up about 70% this morning at this hour now. BNB is doing well too. A couple of green there, the Axie Infinity, that one's done incredibly well this month at $46. It was trading around $20 earlier. It's up at 17.84%, and a couple of exchange tokens up there with Huobi and OKB all up. So it's looking pretty good.
Yeah, and we hope it stays good. Because like Rume said, that the market has a mind of its own.
Oh, yes, very unpredictable.
Yeah, so please let it continue in the green trend and keep people happy. Well, that's it. We'll say thank you so much for joining us on today's episode of Business Morning. It was really nice having you. Don't forget that at 1:30, there'll be Business Incorporated. We'll give you updated stories from the world of business. For now, I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.